Hey, good morning, everybody. It is Friday, October 29th, 2021, our last day in the month of October here. And I believe we will have a close to our monthly candle on Sunday. Might be wrong about that, but I think we have the close on Sunday. So we're going to go ahead and take a look at these ultra high time frames really quickly and just see what's going on. Really, the story hasn't changed since yesterday, and honestly, looks like the same picture we've seen for quite a while now. But just looking at the quarterly here, still looking pretty strong. No signs of exhaustion when we look to the quarterly chart. So this is on the ultra high time frames. This is the only time frame that isn't showing a sign of some weakness in the current move. When we jump down to our monthly, that's when we have this situation where we have pushed on these two newest bars. So the bar that we're looking at for this month, which again is going to close, I think, on Sunday, and then we have the bar from the week before, or the month before, from September. We have pushed to higher highs here, and RVI is continuing to push to lower highs. So for whatever that's worth there, we don't have actual nice peaks to compare, but each subsequent bar has made higher highs while the RVI's made lower highs. So there's a little bit of a sign of weakness there, or a clue of weakness. There's definitely not a strong bearish reversal or exhaustion pattern, but definitely showing some weakness there. When we go to our weekly, this is where we've talked about this for a few days now. We do have that bearish case off the highs, and if this is actually going to be a bearish divergence, what we want to see is this new weekly bar, which will, be there on Monday. We'd like to see that form and see the RVI actually make a peak here. So on the next weekly bar, we would want to see kind of a push down in RVI. So we'd have a nice peak up here, a nice peak down here, and then we'd have higher high in price, lower high on RVI. So that's what we would have to wait for, and again, that's what makes the higher time frames more difficult to pinpoint the move and actually read the signal. So it is going to take a little bit of time to really get a confirmation. But for now, a little bit of bearish wonkiness going on here on the monthly, and arguably some bearishness on the weekly. So as you can see, the high time frames are now starting to really kind of show some weakness finally, and again, just because they're showing weakness doesn't mean it's over. I mean, we could show weakness and then the bulls jump right in and continue to push, and we continue to get exhaustion until finally everything comes into alignment and we get the drop. But at the same time, this could be it right now, right? So we're starting to get alignment up here on these higher time frames, and maybe especially because our daily now just gave us another bearish divergence up top here. Maybe we'll get maybe a larger pullback, but we'll have to see. Again, every time we expect a pullback, we do get some type of shallow correction, and then bam, the bulls jump right in. So 4 hour, so daily had the bearish divergence off this high. What happened was we made an all-time high up here at 45.90. And then in yesterday's market, we came up and we came to 89.75, just one tick below the all-time high. For all intents and purposes, that is a double top. We're talking about one tick, and the range of these candles is hundreds of ticks. So essentially, we have that double top and the bearish argument on the daily and on the 4 hour. So pretty much every time frame is showing bearishness on this test of the all-time high. Now, what I want to also point out is we're also getting the continuation pattern from the low. So we've got a bullish continuation pattern from the pullback to our overnight low from 59.25, I believe it was. So ever since we bounced off 59.25 around 3:30 this morning Pacific time, we've had this bullish argument off the overnight low. So again, this should sound very familiar to pretty much the last maybe 2 weeks now of our pre-markets. We've got a nice bearish divergence off the highs from the 4 hour on down, except for today we actually have the daily kind of in play as well. And then we have the bullish arguments off the lows. And as we've seen, pretty much every time we have the bullish argument off the low, assuming that the 4-hour and every other time frame showed it, it ended up following through for a continued push higher. So this morning, same thing, nice bullish divergence there off the overnight low. And this is on the 4-hour. So we'll see what happens. It seems like it's starting to have trouble pushing to new all-time highs. So the day before yesterday, never got much more than 50% retrace of the day before that. And then yesterday's market couldn't even get up to even touch the all-time high, came one tick away and then pulled back again. So there's, in the past, we've seen really strong pushes, and then as we get up into this area, it's like this little inching up, very, very slight inching. And now, as of the last few days, it seems to be petering out, but don't want to ignore the continuation pattern once again. So let's go down to our 60-minute, and essentially we're at the same thing. Bearish divergence from the high from yesterday. Nice bullish continuation pattern on the pullback. And if we look at this leg right now, the low, I mean, if we go from the previous daily low, we can draw the fib, but I'm just going to move it to the actual extreme low for all this price action, which was right there, just a few ticks below yesterday's low. And that's how I'm drawing the fib here. So all the price action from the lows back here to the high of yesterday. And look where we're finding support. Not only is it the 61.8 retracement of this whole leg of price action, but it's also the CP right here, almost to the tick. And then even there's an argument right here that in the past we found some pretty good support right in this area in the market, and even some resistance. Now this is a 60-minute chart. You can't see all the detail here, but essentially the market came up to this area, pulled back, came up, pulled back, and then eventually broke through. And then when we came back down, we found support here a few times, and then coming into the 27th multiple times, did break through a little bit, but held that area in general. And they tried to push. Remember, this is that day where we had 2 or 3 tests of the 50% level of the previous price action, and then got the failure. Eventually came back up, found resistance there once again. So came up, you can see on this 60-minute candle, right to that 61 area, pulled back, came up again to the 61 area, pulled back, then broke through, and now we're back here to this 60 area again, and we're bouncing with that bullish divergence on the 4-hour, on the 60-minute, and right off the prediction point. So that's what we're seeing here again. Really strong bullish arguments from lows, really strong bearish arguments from highs, and we're right in the middle of all of this price action up over here that we've been in for the last 3 days, ever since we broke through the all-time high back here when it was around 51.50. So right in the middle of price action with arguments on both ends that are equally weighted. In fact, the bearish argument might have more weight because there's a very clear bearish daily pattern. So we from the lows we have 4-hour confidence and 4-hour and lower. Up here we have the daily on top of that. So there's a little bit more of a bearish argument from the highs. But again, keeping that in context of what's been happening in the market, what are the bears really going to have enough strength to go ahead and break lower now? That is the question. We don't know. So this morning, I'll bring up the intermediate time frames, but it's kind of a waste of time. We're just going to see the same stuff. We've got the 30-minute with the bearish argument from the high of yesterday, bullish argument on these overnight lows that we're testing right now, and then the nice bullish argument from the lows of yesterday. So, and then the 10-minute real quick, same exact situation here. So I think this morning, if we look at this from, let me leave the 10-minute up. This morning, essentially what we need to do is, first of all, hold above 66.25 and 67.50. That's going to be important for any type of bullish case this morning. And then obviously you need to get through 73 and get above the overnight high. The overnight high, I believe, is sitting here right at 79.75. So really, for any type of bullish, any confidence in the bulls this morning, they're going to have to hold the CP here at 59 and get through the overnight high and then obviously we get to the all-time high there. So, and it's not very far. In the context of this market, it's just a minute or two away from coming all the way back up if the bulls are going to be strong here. And again, that overnight high right around 79.80 needs to be broken, and the first line in the sand here is going to be this 66.67. So that would be the argument for the bulls this morning. Again, it's literally almost a 50-50 crapshoot here. Now, if they come down and they get through the prediction point here around 59, and then can get through the KP, which is sitting right in line with all this. Remember, we talk about this all the time. And let me see if I can get this box tool here. All this choppiness here. So getting through it, notice where we bounced once we got out of that box. Bounced through it for a while, got through, found support right off of it and got this push up. Well, coming back down, that is going to be an area that may be a trouble. So if we can break through that and these two KPs right here, get through the previous daily low at 45, then, you know, there's potential, unless the bulls just whip it right back up, there's potential for more downside here. And that's just kind of where we're at for this morning. Again, I don't think that it makes sense to spend any more time on anything. It's a very, very mixed market and really could go either way. So for our YouTube audience, have a great weekend. Have a happy Halloween, and we'll see you back here on Monday.